What is up, guys? In this video I'm going to show you exactly when to buy and then when to sell. My name is KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. So without wasting my time, let's get right into the video. So yeah, if you've been following my videos for a long time, you know that I've been teaching so many strategy videos, even when we talk about price action, right? The sniper entry videos where I'm teaching you how to catch the highs, how to catch the lows, trend line strategy, double bottom, double top, Fibonacci, and then chart patterns. But one thing that has really been lacking most of my videos is exactly where to teach the trader when to buy and then when to sell. And when I look out on YouTube as well, I've seen so many videos that try to explain when a trader should buy and then when a trader should sell, but none of them actually does justice to the way that I'm going to be doing it for you guys. So there's a little secret to the market I'm going to really open to you, and then when you open your eyes, take your time and then briefly watch through the sequence of which I'm going to be explaining things to you, is going to change the whole game for you if you really do pay attention. So grab a notepad and a pen and then jot these kind of important points down as I go ahead. It's pretty easier for any trader at all to be able to learn technical analysis, start out to draw trend lines, start out to learn the chart patterns and all. But the most difficult point in the market is when a trader actually gets so confident in finalizing when to exactly buy and then when to exactly sell. It can be a daunting process. Most time traders learn how to draw the technicals, but the moment they get onto the market itself, then they get all over the place because they don't know exactly when to jump in on the market or exactly when to sell. But even with the ones that do try, the moment they do that, they are all over the place, taking huge losses or maximum drawdown lasting for several hours or days before the trade even materializes. But in this trade, I'm going to show you or open your eyes to a dimension, a new dimension of an entry point where it's going to really change the game for you. Pretty simple, rule-based, systematic ones that if you tend to follow them religiously, then you're on the right path to success. So yeah, what I'm going to do is that I'm going to take a few scenarios, few technical scenarios, and break them down and show you the logic behind how I'm going to enter the market and why I'm not going to enter at a certain point and why I'm going to enter at a certain point as well, so that you just follow through the journey and then perhaps use that as a basis to measure your own technical analysis. Yeah guys, so if you know me, you know that I particularly use candlestick patterns as part of my technical analysis, and then that is because price action has everything to do with really understanding candlestick analysis, right? So if you're a price action trader and then you don't really understand candlestick, I pretty much believe that then you're not probably trading price action, because price action in its way, it's like the name suggests, price and its action, and then candles represent the price action. So you have to really understand what the candles are doing before you can be able to say you do understand price action. So what I said in this video, being the title of when to buy and when to sell, all we're trying to do is that we're trying to break down real scenarios, real life scenarios of when I would have personally jumped in on the market to buy or when I would have personally jumped in on the market to sell, right? So yeah, let's look at one example. Currently I'm looking at USD Swiss franc, and then we can clearly see that throughout the whole of last week, what this pair majorly did was to sell off, right? Actually starting from the previous week. So if you can see my chart, you can see they have these vertical lines here. So this one and this one pretty much displays what happened on the market last 2 weeks, and then from this red line all the way here pretty much also displays what happened on the market just last week, right? So because you know that I'm a swing trader and I catch entries from the very top or the very bottom from a new swing point, then it means that for any reason at all, if I'm supposed to be in this trade, then I should have caught the move within this range and then expect the market to come all the way down, which also pretty much means that for the whole of last week, for an entry on USD Swiss franc, it wouldn't have been something I would have participated in, because the market started trading all the way from here and then literally continued all the way down here. But let's analyze what would have made me get an entry point within this range. So if you've been watching me and talking about particularly market structure, then you know that when I display my characteristic of turning points in market structure, when the market makes high, low, rising highs and rising lows, before a trend would change, then I give two preambles. I said number one is either going to make a lower high and then make a lower low and continue in the same fashion, or the next best thing is going to do is create this higher low, higher high pattern and then sort of creates this double top region or equal highs region, and then before you find the market literally change direction, right? And then if you've also been watching all my videos, which I really recommend you doing, then you know that I really mark the highs and lows in the market using the market wicks as to the body that most traders actually do. So with that in light, then you're going to observe clearly that when you're looking at a currency pair like USD Swiss franc, which I had been trading here, then at this point would have been what the previous highs, which is using this horizontal rail line to mark it out here, right? So let me just change this color to red and let's see it distinctively. So red here marking out the high that this market had traded before it eventually started trading all the way down. So if you look at this, we just started making lows. Right now, somebody may be asking, why are you not going to catch this trade all the way from down here? Because it literally looks like the market is making a turning point and then it's coming all the way down. Now if you listen from just what I briefly explained, I said one of the characteristics of the market at a turning point is that it's either going to make an equal high and come all the way down, or it's going to make a lower high and then continue with a lower low formation. So with this market making a little bit of a retracement or a pullback, which we have clearly observed here, then it's okay for us to think that it may go all the way up to make this equal high before it come down, or make this lower high and then continue all the way down to lower low. So that is why I wouldn't be first interested in catching that initial drop off, thinking that it would eventually come back here and come back down. Now this particularly differentiates the knowledge of any other trader and then the real meaning of price action, right? Because if you don't understand price action, then you're going to be easily tempted that because you just saw this one, you want to jump in. But somebody that truly understands price action, they know that regardless, the market is going to return before it does the thing that it needs to do, looking at historical price movement and just how market psychology with price action just works. So that is why usually you wouldn't particularly find me jumping on that first swing, but wait for the next one. If you observe how market just reverses back up, it pushes up first with this bullish candle and then second with this one as well. Now this is the mistake you find a lot of traders actually getting themselves trapped in the sense that the moment they see such a formation like this, then they start literally just getting in on the market and then, you know, trying to sell this market because they're already saying that, okay, we just made a double top. So yeah, why is the double top? Because the market went up, it came down, it's all the way back up. So let me just start selling here, my stop loss above the range, and then put in my take profit down here. But the real reason why I cannot escape or skip this kind of setup is that, you see, it's basically from two concepts, right? You do not want to stand in front of a moving train, right? So not wanting to stand in front of a moving train basically seems to explain that once the market is making such a high return again, one thing is certain, that it created this high, is coming all the way down. What if this market is actually about to create a new high, and then because you just saw it standing right in front of this double top, you're thinking that that is where it's supposed to reverse, so you're already shorting? What do you stand the chance of having? You literally stand the chance of having the market run at your stops and then perhaps continuing or even reversing. So the best and then logical way is to see if there is bearish presence, right? So that is the key takeaway from this video. The best and logical way when you come to see the market in such a range is to basically see if you have a bearish presence. And how are you going to have that bearish presence? Let's look by flipping to the next candle. You can clearly see that for anybody who tried catching the tops here, this wick right here would have just taken them out of the market and then getting the market back into their entry. That is where most traders get bitter and say, oh, anytime I trade, the market takes me out before it comes to my entry point again, because you're not reading price action brilliantly the way you're supposed to be reading. So yeah, usually you'd have me find an entry around this range, put my stop loss just right above the range like that, and expect the market to, you know, now come back down into profit. So yeah, that is when I'm taking my analysis. I usually like to use the higher time frame, anything from the 4 hour, 6 hour, 8 hour, because there candlestick patterns, the formation that you get, have confidence backing them, right? So the higher the candlestick pattern, the stronger the confirmation, right? So yeah, we can clearly see that if we continue this, the market just continues all the way down and puts us massively in profit before it goes down. So this is a little trick that I'm showing you with respect to entry on a higher time frame. Now let's look at another example from oil as well. This is pretty straightforward one, so I'm not even going to waste much time on it. But if you've really taken so much precaution and then knowledge from my trend line strategy, then you're going to see that when I see something like this, I'm only trying to identify the first point, the second point, and then the third point. Again, see that with regard to oil, you would have had a third point just around here. So this is how the market would literally look like, right? So yeah, we're going to have that first point all the way up there, right? So let me denote the first point by 0.1 here, and then we have our second point right here as 0.2, and then we are literally waiting that the market some way somehow is going to come back into the 0.3 region before we sort of find an entry, right? So most traders, like I've taught you, would now be looking for an entry range within the third touch, expecting the market to come all the way down. But the real truth is, when are you going to jump in when the market comes to that third touch, right? So let's look at practically how a price action trader is supposed to read into the candlestick formation and know when to jump in on this one. So yeah, we see the market now making effort to come back, right? So remember again that the way I kind of distinctively break down the market is knowing that this was activities that happened the previous week, and this is the activity that is happening in that current week, right? So in that very current week, the market has started trading all the way up and then it's continuing in the same direction. But that's not what we are interested in. We're interested in seeing how the market reacts when it gets to the trend line. So we can see it's making its way and efforts up there. But one thing that most traders also tend to fall prey to is that once they see the market making its way up onto the trend line, they do not really wait for price action to really get into that range, and then they start making straight decisions whether they're trying to really sell from this region or they're trying to really make a trade decision. But you really want to take your time and then patiently watch exactly how the market reacts within this range, right? So yeah, as we're observing, let's see, we quickly have this kind of a candlestick that runs through the trend line and then pushes down. This is also one region that gets a lot of people already trapped into the move because they're thinking that the market might easily leave them, so they want to quickly jump in before the market just drops because yeah, we just tapped onto the trend line. Kojo says when it taps on the trend line, sell. No, that's not what you should do. You should wait for the next subsequent formation that's going to happen on the market to see if it gives you that bullish presence or bearish presence. So if we do tap into this one, then we can see clearly that we have a very significant bearish presence and something to hide our stop loss behind, because here once we put our entry here and our stop loss right above here, then we have this whole region to put our stop loss behind, in the sense that worst case scenario, that is where the market is going to protect us. And if this market is not supposed to really make a low, then we have a good reason to think that it's going to break this and then continue all the way up. That is a loss worth taking than something scanty and thinking that okay, I'm supposed to get a perfect entry, perfect stop loss. Nothing like that really do exist in the market. So if we find something like this and then we continue all the way down, you can see that what the market just smashed take profit and then runs insanely all the way down just by following these beautiful price action patterns. Yeah guys, so you can see that this video is pretty much a detailed one, and if I'm supposed to go on, we're going to really end this video at probably 30-minute or 1 hour video long, which I don't really want us to get bored looking at the same type of formation patterns frequently or often. So what I'm going to do is cut this video very short here and do a part 2 or part 3, a subsequent follow-up video on it, right? So if you did enjoy this insight, which I strongly recommend you backtesting and then do a lot more research on and then thinking through thoroughly, do smash the like button. Let this video get about 1k to 2k likes in the first 30 minutes, and also smash the subscribe button if you really love this content that I'm putting out. Connect with me on all social media at KOJOFOREX, and then clicking the link in the description to join the KOJOFOREX Telegram community. I drop this kind of videos there all the time, and then drop trade signals for community members to make trade signals from for free. Click in the link in the description to also join my recommended broker Xness. You're definitely going to love them. Instant withdrawal, instant deposit, right? So without wasting my time, I hope you guys really did enjoy this, and I'll see you guys in the next video. Peace out.